Welcome back, guys, to another video here. It's your boy Oye Capitals, and I'm back with another video here. This is another tutorial video for all my beginners that are looking to start trading and looking to find a entry model or strategy that you can use that will be easy and quick to understand to find profitable setups so that you can start trading in the forex market here. Now, today's video is we're going to be talking about fair value gaps and how the fair value gaps entry models can be used to apply it into a live chart and have a live trade so that you can find high probable setups into enter to make some money in the forex market. But before we start, please like, comment, share, subscribe to the video. Let's get to the subscribers 250 by end of the year, as we are 228 as we're recording this video. So comment fair value gaps. I want to see fair value gaps in the comments. So the more we push this video, we want me to get it out so that people can subscribe and support the video. But yes, and also follow my telegrams in the description where I post all my setups on a day-to-day basis, update my members, what I'm looking at for the week, my watch list and all these sort of things and any sort of tweaks. And also my Instagram, as you can see in the bottom of the description, everything on the bottom of the description. Please follow all my pages. I'm active on my TikTok, my Instagram, and obviously my YouTube is where I post all my long form content. So please check them out and follow and subscribe and do all the nice stuff so we can keep pushing, and obviously you guys can help motivate me keep dropping videos. But without further ado, let's get into today's video. So today is a talk about fair value gaps. What is fair value gap essentially? Well, fair value gap is one of the biggest names that is known by in the trading community, I should say. Now, there are many names that a lot of traders around the globe, refer to. Some people call this as imbalances, some people see it as an inefficiency, or some people call this a liquidity void. So there's many names to describe this sort of idea or this sort of entry model that we have going on, but they all fall under the same umbrella, the same brush, or same basket. But I personally call this imbalance, but obviously fair value gaps is much more sentimental, so that's why I went with fair value gaps. Now, what is a fair value gap? Essentially, what fair value gap is basically is when a buying or selling pressure leads to a significant price movement, leaving behind gaps on price charts. Now, what this means is, for example, whenever price obviously goes up and down, meaning there's a buying and selling happening. So what fair value gaps happens is when there's a huge push to the upside or huge push down to the downside, causing no buying and selling in terms of that sort of equal transaction going on, where there's a huge bias, positions going up to the point where price is pushed and there's no retracement to that sort of last wick that caused the last closing of the wick or opening of the wick based on what current trend we are in. So yeah, that is sort of how fair value gaps works with price charts and price actions. Now, just to be obviously for your information, fair value gaps are only technically based sort of analysis. Fair value gaps has nothing to do with fundamentals. It's all technical analysis based on candlesticks and price chart actions, as you can see here. And for example, whenever fair value happens, usually it's influenced by fundamentals in the market. So whether there's a news coming in, whether there's a huge sort of Monday morning when there's a spike of all this, it's meaning into institutional, obviously influx and a huge amount of buy orders or selling orders, depending on whether the current market is, whether sort of based on the COT report, if there's a huge orders of buy coming into the market. For example, crypto can be a very victim of this, where there's huge buying going on currently at this phase where crypto is booming crazily. So these sort of things is reason why we tend to have fair value gaps from time to time. So that's why when I mean fundamentals, these are the sort of things I mean when I say fundamentals. And last but not least, it says fair value gap concepts is rooted in the belief that the market naturally tends to correct itself, i.e. a retracement or a pullback. Now, what this means is usually whenever price has a huge push to the upside or downside, the phrase that say whatever goes down must come down. It's similar in the trading world, whereas whenever there's a huge push to the upside, price usually tends to retrace because obviously trading is all based on feelings and greed and sort of emotions. So whenever people buy to the point where greed kicks in, guess what? fear start developing, and people start, guess what, taking profits. So what that means is people are, starting to sell all the positions, and guess what, price starts to push back, which is a pullback or retracement, that sort of thing. This is sort of a mindset how fair value gap concept is sort of rooted in the fact that people always buy, will always sell their positions, meaning therefore they end up selling to take profit, which will then decrease the price of that sort of currency pair or whatever asset class that each trader is currently looking at. Again, to obviously to follow all my setups and all my breakdowns on watch list for the week, please link in the description for my Telegram, and also follow my socials, TikTok, Instagram, so you can get more updates on all my videos and all my posts that on my social media. Anyways, back to the video. Now the question is, how do we identify a fair value gap on a price chart? There are three criteria and three things that we always look at to first identify a clean fair value gap on a price chart based on technical analysis. Interesting. Based on technical analysis. The first one is spotting the big candlestick, which means the candle that caused the change in price action. Meaning, first of all, price didn't have a huge momentum, and then all of a sudden there's one candle that started that huge influx of buying orders, pushing things to the upside, vice versa, candles pushing things down to the outside for bearish in the bearish trend. So these are the first thing that we look at. We need to spot that candle, that huge candle that caused things to start going crazy in the market. And then the second thing is to analyze the neighboring candlesticks. So what this means is we're focusing on the gaps between the wick of the following candle after the huge big candle that caused the price to push up or push to the down, basically creating the fair value gap essentially. And last but not least is defining the fair value gap. So i.e. in a bearish trend, the fair value gap is a price area between the previous candle's low and the following candle's high. So essentially, it's basically, for example, in a bullish market, when price pushes up, when causing fair value gap, the closing of that fair value gap candle and obviously the opening of the other fair value gap candle, those sort of huge, space where there's no wicks that is, closed in both of them, is where we find that huge sort of gap between the opening of one candle and the closing of another candle. So that gap, if there's no sort of, wicks touching or sort of candles touching each other, we can then identify, start to form a fair value gaps. So I'm going to show a live example in the video as we go on. Now, this is a live chart of Euro USD on a 15 minutes time frame. As you can see, it says the candle shows the big candlestick. We see a huge push to the downside, from here, a huge push down to the downside, and then price, retraces. As we said, anything that goes down, anything that goes up must come down, anything that goes down must come up, vice versa. As I was saying, so since we have a huge push to the downside, this is what we're looking at here. What means, so once we've had that push down, what we then expect is price to come into this gap here and mitigate this gap before pushing to the outside for continuation again, because again, market was on push, pull, push, pull, push, pull, push, pull, vice versa. That's how the market goes up, retrace a little bit, goes up, retrace a little bit, goes up, retrace a little bit. That's how price action works. So whenever we see this, we can by default confirm that we have a fair value gap going on. Now, the last but not least, before we go into some real life examples, is how do we actually trade this entry model that I'm speaking of, that I've been speaking for the past 5 to 10 minutes here. Well, as I say, so the first rules checklist is identify the current market trend. Again, as we start the video, you heard me talk about trends and all these things. It's very, very important for any person as a claims to be a trader to understand market structures and trends. They're both the same thing. Structure, trends, up, down. That's the key thing that we need to understand first. The second thing is highlight the supply and demand zones. So the supply and demand zones are basically areas that are key level pre-price points, meaning areas of interest for institutional traders to use as an area of entry, where there's a strong level of as you know, retail trading would say, resistance or support here. That's the same thing. So I didn't highlight the supply. For example, supply based on, you know, a bearish market and a demand zone based on a bullish market. So depending on what structure you, what kind of trend you're in, you then have to choose whether supply, bearish market, demand bullish market. And then the third one is to use FVG to identify and confirm the entry point. So once you have identified the supply zones and you've seen that price action has confirmed as a fair value gap point, this is where we use the fair value gap to identify / confirm the entry point. And then we then confirm our stop losses and our take profits based on the market structures and based on price action, so we can have a nice risk to reward trade. Now that's all for the 3-week part of this video. So we're going to move on to the charts, and I'm going to show you the laughing example of a trade that I actually sent to my Telegram, which is in the link description. Follow so you can also be notified whenever I post a setup on there as well. So this, yeah, so without further ado, guys, let's get on to the live charts and a live example where I showed a live trade for all my people in my Telegram. Yes, back to the charts now, guys. So this is GBPUSD. This is one of the trades that I basically posted on my Telegram. Now, as we can see, we can identify we're currently in the bullish sort of cycle where, you know, price is pushing up. So we can see a sort of up, you know, up, bullish, up, high lows, high lows. Now, since I've identified that this is a bullish sort of, you know, break or structure here, and price has retraced and, you know, respected this this demand zone here. Now, my next point was to then, you know, wait for the liquidation of this Asian session that we can see here. So we can identify this in the Asian low. So Asian low, we can, yeah, and then Asian high on this candle here. So this candle here is an Asian high. Now, price has mitigated, you know, closed, you know, swept above this Asian high here, which normally confirms that, you know, there needs to be some price action to the bottom before a push to continue to the upside above at least these highs that we have here. So once I've seen that this is swept above this, you know, wick here, this confirms to me that there's price action more likely to come to bounce, you know, around somewhere here, because again, we have liquidity here and we have the Asian low at this point here. So therefore, my next obviously area was to identify the fair value gap, which we have here, because this candle, we can see a huge push to the upside. Price, you know, came down a little bit, however, failed to mitigate this candle here that we can see, this bearish candle here, you know, pushing to the upside and creating higher highs, obviously breaking above this, you know, area as well. So what that tells me that there's a, you know, fair value gap of entry that we can see here. And let me just delete this. And therefore, there's a high possibility that price will retrace to this fair value gap that we have here before we can see a continuation. So this is where I identified this area as a nice fair value gap, and then my stop loss was literally just below this area here, SL, and then my first take profit level was above this swing point here, meaning, you know, it's a nice area to, you know, look for a take profit, first take profit. And then my last full take profit was this area here, just to keep it nice and clean, because I believe there was a news fundamentals that were coming in during that day. So just sort of, you know, nothing too crazy in terms of looking for huge, you know. And then now, once I've identified my stop losses and my first take profit, now the area I'm going to be entering is the 50 Fibonacci area to come. So this is how I literally, you know, was looking and posted on my Telegram. I'll leave a screenshot there for you guys so you can see how I was able to come up with this trade and how it went. So it was literally a 5.2 trade, and without further ado, let's see how the market played out for us. And just like that, we have a take profit hit of, a nice 5.2R trade with price respecting the fair value gap, bouncing it off and pushing up to our tech, cleaning our first take profit area, taking our second full take profit, and obviously I think a new fundamental news came in and pushed price to the downside. So this is just a video, guys, just to show you and break down the fair value gap entry model, how I was able to identify what I was looking for, which I explained in the previous slides, so you can have an idea of theory wise and practical wise as well. Also, like, comment, share, subscribe, follow all my socials. Let's get this channel to 250 subs by the end of the year. I'm begging you, that's all I'm asking for my Christmas present. And without further ado, it's been your OA Capitals, and I'm out. Peace.